Good morning, folks, and happy Triple Witching Friday today, the 16th of September, 2022. Thanks for being here. Guess what, everyone? We made it through another rollover week. Holy cow, these weeks. I tell you, if there's anything I can almost guarantee in trading to be consistent is how garbage rollover week trading is, as this week was. I should have been off on vacation, to be honest with you. But thanks for joining me today on episode number 2316. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So what do we got? Here's what we have today. The ES did this thing that is so frustrating. We were looking for the 3905 yesterday, the 3905 test, which was last week's low, giving us a double bottom and anticipating a break. I actually looked to get short the 1950 yesterday, 1950, and looking for that to break, and no banana at all. It ended up rallying into the close, and as soon as the cash closed, boom, it explodes right through. Run stops through the 3905. So the overall market posture is as expected, but I couldn't take advantage of it. Risk-off sentiment this morning. The S&P is down quite a bit, actually, on this thing here. The Euro Stoxx 50 and the DAX should say DECE. I did not update that. The front month is December, and the Euro Stoxx 50 and the DAX now. So those are way off. Russia announced that it is building a Nord Stream-like pipeline straight into China and will not be feeding, implying that they're not going to feed Germany and the rest of Europe with Russian gas, which is a good way to ensure an alternative solution for the future. So that's where we stand. Great Britain this morning came out with a very poor retail sales release for August. Came in at negative 1.6, expected at negative 0.4, causing a nice little push down. The cable, the British pound, is at its lowest since 1985. Michigan sentiment this morning is another data point for the Fed that the market's watching. So we are completely balanced across the board. Dive. Sorry, that's one of my alerts for an impulse move. So we're in complete balance in the S&P. Crude was pretty much flat on the session. Really, the one-time framing looks to be downwards across the board. And the fact that we took out 3905 last night is pretty important. Again, crude pushing through here, giving me alerts to pay attention. So that's it. Michigan sentiment at 10. The expectation on Michigan sentiment, and this is the prelim number and could be a mover. The expectation is 58.6. 58.6. The prior's 58.2. Pay attention to that number. If you have a position into 10 o'clock Eastern, 9 o'clock Central, 3 p.m. London time, if you have a position and you don't have cover, in other words, you have not covered your risk, this is one you don't want to hold open into the number. The inventory for the S&P is 100% short. We opened and have remained and traded below yesterday's settlement, 100% short. The range is 42 points higher than the mode, but still within one standard deviation of daily of the overnight range. So 42 points is relatively wide. This portends a relatively wide open. We are in balance overnight. We'll look at the chart in a second. But with 100% inventory, we might see responsive buying on the open in the S&P, but we have a wide range, so we're expecting pretty decent action. Triple witching Friday. Some products will expire at 8:30 Central, 9:30 Eastern, and some, or I should say, some options will expire at that point. Some options will expire later in the session. So today we still have participants needing to hedge delta exposure, and in case they are being delivered, they use the futures for that. So we may still see these big sweeps and then, lift 500, sell 400 type of moves, and that's just part of the quad witching process, triple witching process. Let's take a look at what was expected yesterday. Yesterday, the primary scenario, given the way we closed on Wednesday, the primary scenario is that we were likely to go down and check. Why is this fuzzy? Should be 1080p. The expectation is we would check the overnight low. It's 39.48 and a quarter, and I was expecting it to try to put in a higher low and then hold the range. That's what I was looking for yesterday, for it to just hold the prior range. And the secondary scenario is a push higher that then fails to hold. The key price that I highlighted on scenario 1 is, again, that 75 right up in here, 75. And the expectation on the secondary is to push higher, to be responsive higher, find the settlement at 39.65, 50 or so, struggle, and then turn over. And I expected it down in the 13 zone with the extended target, if you're a part of Convergent, in the head trader channel. I talked about the extended target being 39.05, which we got later in the session yesterday. Traded scenario 2 primarily. Let me check. Looks like my platform is doing something funky. 1 second while I correct this. I'm sorry, I have to restart my platform here. Give me a second. Did some upgrades to the network this morning, and they're impacting connectivity. Let's see. Okay, so I'm going to use IRT instead. Hang on 1 second. I'm just going to relog into my trading platform. Lately, I've been messing this up because I'm not coming in early enough to test everything. So that's on me. I own the fact that this is happening. And I apologize in the live broadcast to be sitting here. Okay. Yeah, there's something goofy going on here with this platform. So here's what we'll, oh, okay. All right. Just having it load. I'm having all these charts load, so I'm grabbing a crap ton of data. How much is a crap ton of data? It's a crap ton. Okay, so here's what we've got. So, wrong screen, buddy. All right, so here's what we've got. So we turned over, we gapped down on CPI, we started establishing one-time framing down. One-time framing down. Oh, let me turn down the news. We started to one-time frame down from the CPI. And then yesterday we put in that lower high, expected the range to remain in line given the roll, given the Michigan sentiment today. And what we did yesterday was to open, test up, rotate down, and then push all the way down to 39.05, giving us a double bottom with last week's low at 39.05, and then holding steady near the low. Yesterday was quite bearish in terms of the close and the expectation. And the expectation, really, what I really wanted is for the closing range to take out 39.05 and start running 39.05. Expected a stop run below 39.05 on the weekly, and I expected a stop run below 3,900 also on that 1950 short, and it just did not materialize. It's one of those frustrating things about trading. So that's what we have. Here's what things looked like. We had a pretty balanced profile. We were opening right after the trader bite was done. We started to actually sell pretty hard, so we opened much lower than expected. I expected it to open right at full session mid, full session VWAP, and I expected it to be choppy, and so I was expecting the test of the low to come in early, and then the response higher, and it did, but it didn't give us a chance to catch a runner to 48.50 because it put in actually a low right at the open. A low right at the open is not a good low to lean against or to test. I like to lean on a first test of the overnight high, overnight low once it breaks. This acts a lot of times acts as a significant area, at least for a virgin test. That's a setup for me. There you go. We're talking about setups. But we did test down. We did take out the overnight low, and we pushed higher. And on this push higher, I was looking, as I had indicated, I was looking for the gap to settle trade. This is the gap to settle trade right here. Pushes through, gets up into that 75, 77 area. It actually tests the overnight high as well as the low here, and then it just explodes downwards. Not expected. Expected this to consolidate here and try to continue higher and then sit sideways for most of the session. But what it did is it turned around on that mortgage news. The mortgage rate news came out right at this point. It dropped right through, and then from here it was all about finding areas to lean against short. The IB is valid. A good turn here on the IB low. The IB short was valid, and then I couldn't do much with this later in the session. I really couldn't take advantage of this. I got short somewhere in here at 1950, something like that, looking for this thing to get back and retest that low at 39.0550. That's what I was looking for yesterday, or 39.05. Was looking for yesterday. This gives us a double bottom on the weekly. So we have, for those people who like to trade patterns, it gave us basically an inverted cup and handle type of formation on the higher time frame. So the expectation is that this would likely run quite a ways. And the expectation here is for 38.60, which unfortunately the overnight session already did. It just did so. We've been balanced for most of the session, and just now we broke lower. So overall, the main trades, the main homework trades that I had for the session have already been taken. So the key support line, the key stock zone to monitor this morning is 39.05. We're looking for, I was hoping this morning because we're 100% short in inventory, I was hoping the key trade of the day is responsive buying to come in and respond to the fact that we've sold off overnight. Responsive buying up to 3,900. Usually we don't stop at 3,900. It's a major strike, so you're going to get all kinds of BS at this price, but I expected it to push to 05, potentially to 08, fight, and then give us a short to rotate back for a scale of 3,900, and then start to break through to the overnight VWAP, overnight mid, break through that for 38.60. That entire trade is now tossed in the trash. Unfortunately, that's a That's a 6R trade, 7R trade that's set up overnight. You just need to be, you need to be up as a day trader. You need to be up 24/6 these days, or 24/5, to be able to catch those good moves, which get taken away overnight. So that's what we have. We started out with a balanced profile. Now we have somewhat of a multi-distribution profile. I'm looking for this thing to pull back at this point right in here to 38.77 or so. Looking for a test of that. We have a little bit of backup with VWAP and the full session mid behind each other, just above at 82.84. I want to see the quality this morning. I want to see the quality of the retest into this 77, 82.84 to get short. At the very beginning, if we do run up, I'm not going to just blindly get short these what seem like clear support resistance areas, or really resistance areas. To me, I need to see the quality of the response. Again, we're 100% inventory is short, so I'm looking to see who is likely to cover their shorts, take profits on the run overnight. And once that's settled, then we start to look for the overnight stat. We start to look for levels below here. So what we've done, let me fold these profiles into this composite. And then I want to create a separate composite here. So here's where we are, right down here. And here's what's on top of us. Boom, boom. See how these overlay each other? This 39.50 to 39.57 area represents formidable resistance. We do have settlement at 39.19. The response, if any, is likely to be to again 3900, 3905. 3905 doesn't hold, then it's likely to run to the 19 quarter, which gives us a setup long inside of yesterday's range. But there's significant resistance up above for this market to take over and get back. And of course, it'll be a while before we see the CPI number again. It really seems like inflation has taken hold, and we have a lot coming in terms of risk overhang. We have the Fed next week. The 21st is the decision announcement and the conference. We have end of month coming. We are in a quantitative tightening environment, so rallies are going to be difficult to sustain. As you have seen multiple times now, we create a rally that's quick and then it just sells off even quicker. That's just the kind of market regime that we're in currently. So I'm looking for how this thing responds, and I'm looking for the short side for the reasons provided here. You can see that there's a lot of overhead here. Again, the 0500 beneath, 1950 settlement, and then extended, we're up into the 3950. This has been an underline, the 3950 for a couple of days now, and 3957. These are all defensive positions. These are all walls that the market is likely to struggle in, which creates opportunity, which creates an edge for us to trade against once it does that. So let's take a look at what's below. What's below here? We have this multiple confluence in this 20 area. This is the next key area to test down below, 38.20. 20, okay. We're quite a distance away from it. It's about 50 points. We've already run a little bit. The expectation this morning, let's outline that. Man, is that crude? Yeah, it's crude. Now it's spiking the other way. What are the expectations for today? Expectations for today, open auction. Open auction. You can see there's a lot of, you see those bubbles there? This is two-way action currently. Expectation is responsive buying, looking for responsive buying right back up into that 77. And then 82, 84, consolidate here. And then we have a gap down. We have a gap and go situation, gap and go potential. And I'm looking for this thing to roll over and start walking itself towards that 38.20 as scenario one. Expiration is a factor here. Expiration creates a market that is difficult to read. The order flow is not as clean. Secondary, open auction that pushes, struggles, gives us a higher low, setting us up for a potential long. Back through the open, and now we're pushing the 77, the 82, 84, and now we're going for that 3,005. And I'm expecting that if it does turn down to the 3860, maybe even 3855 down here, 55. If it turns down there, then the 05 represents 50 points of rally range, and that's about what I would expect for today. I wouldn't expect much more than that statistically in terms of RTH range. Those are the two key scenarios. 3820 is the main target down below. 3905 is the main target above. That leaves us with the prior settlement, which I expect to remain open. We're opening in a gap. Gap rules apply. If it does not become responsive early on, do not try to buy. In other words, if the market doesn't test and immediately run and close that gap, it is telling you there's no clearer sign that it doesn't have the strength to just close an overnight gap. If it cannot close an overnight gap, what are you doing getting long? What edge could you possibly have? Maybe I'm wrong, but what edge could you possibly have? One last thing I want to show, the relative delta here. Whenever these things are working together, the small lots and the large lots, whenever these are on the same size, you could see that they're both negative. It is hard to rally. I've noticed that it's very unlikely to rally unless the very large lots are likely to be hedge positions here today. But overall, when they're both on the same side, just like yesterday, it's really difficult for the market to sustain a rally. It can rally, it's just hard to sustain. So if you see a rally and you have a long setup, make sure you cover your risk relatively quickly, as I don't expect that to be sustained unless, you know, there's news that I'm not aware of. Crude, real quick. Oh, has to load. Shoot. Okay, let's switch to crude. Oh, I didn't roll. By the way, crude, you should be rolling. You should be trading November. Yeah, so I'll pass on that. I'm not going to cover crude because I don't have my charts up and ready. Anyway, good luck with that. Hopefully you're picking something up on a daily basis. Really important that you're here, not just listening to these scenarios, but to check your own process. This is what we did in prop. We talk about what everybody thinks, and then I use the information that makes sense to me. So hopefully on a daily basis, you're picking something up. I would love for you to mash the like button, find and hit the like button today. And of course, if you're not subscribed to the channel, please subscribe. It gives it better exposure. You can subscribe and hit the notify button. And I'll see you at the next Trader Bite. Good luck.